if I told you that the single biggest force reshaping your job, your savings, and the entire global economy isn't inflation, isn't interest rates, it's artificial intelligence? Welcome to the Money Map Podcast. I'm Alex.
And I'm Jordan, and today we are diving deep into how AI is completely redrawing the investment map. From Nvidia's insane chip projections to Meta cutting jobs by the thousands, to Bitcoin, quantum computing, SpaceX, and what all of this means for your actual portfolio.
This episode is packed, so let's get right into it. And Jordan, I want to start with the number that honestly stopped me in my tracks this week. Nvidia is projecting $1 trillion in AI chip sales. $1 trillion.
Okay, I have to ask, because I think a lot of our listeners are hearing that and going, that's a big number, but what does it actually mean for me as an investor?
Great question. So here's the thing. Nvidia makes the GPUs, the graphics processing units, that power essentially every major AI system on the planet. ChatGPT, Google Gemini, Meta's AI, they all run on Nvidia hardware.
Right.
So when demand for AI explodes, demand for Nvidia chips explodes with it. The company has already grown its revenue by over 200% in recent years, and analysts are projecting that this growth curve is nowhere near done. The $1 trillion figure represents cumulative AI chip market demand, and Nvidia currently holds about 80% of that market.
80%? That's basically a monopoly.
Essentially, yes. Now, the stock is already up massively from where it was 2 years ago. So the question investors face is there still runway? And I'd say yes, but you need to be smart about it. Don't chase the peak. Dollar cost averaging into a position, meaning investing a fixed amount regularly over time, is a much safer play than throwing a lump sum in right now.
That makes sense. Okay, so that's one side of the AI coin, the winners. But let's talk about the other side, because this one hits a little closer to home for a lot of people. Meta just announced it's laying off 20% of its workforce, and they're directly citing AI automation as the reason. So is AI actually killing jobs?
So this is the conversation everyone is tiptoeing around, and I think we need to be honest about it. Yes, AI is eliminating certain categories of jobs. Roles in content moderation, data labeling, mid-level coding, customer service. These are all being automated at scale. But here's the nuance. Every major technological revolution in history has displaced some jobs and created entirely new ones. The Industrial Revolution wiped out hand weaving, but created factories. The internet killed travel agents, but created digital marketing. AI will do the same. The jobs that survive and thrive will be ones that require human judgment, creativity, and emotional intelligence.
So for our listeners who are worried about their own job security, what's the practical takeaway here?
3 things. 1, learn how to use AI tools in your current role. Don't fight the wave, ride it. 2, upskill into areas AI struggles with, like strategy, leadership, and interpersonal communication. 3, and this is the financial literacy angle, invest in the companies benefiting from this shift. If AI is going to reshape industries, you want to be a shareholder in that transformation, not just a bystander.
Love that. Okay, let's shift gears, because there's another sector that's been absolutely on fire lately, and I honestly did not see this coming. Quantum computing stocks. Companies like IonQ and Rigetti have seen their stock prices surge by hundreds of percent in a matter of months. Is this the next big investment opportunity, or is it just hype?
Okay, I love this question, because quantum computing is genuinely fascinating, but it is also genuinely misunderstood. Here's the simple breakdown. Classical computers process information in ones and zeros. Quantum computers use quantum bits, or qubits, which can be both 1 and 0 simultaneously. That means they can solve certain complex problems millions of times faster than any computer that exists today.
Okay, that sounds revolutionary. So why the hesitation?
Because we are still in very early innings, most quantum computing companies are pre-revenue or barely generating income. The technology works in labs, but scaling it to commercial applications is still years, possibly a decade away. The stock surged because of excitement and speculation, not because of earnings.
So it's high risk, high reward.
Exactly. If you want exposure, keep it small, maybe 5% of your portfolio max. Think of it like a lottery ticket with better odds. The potential upside is enormous, but you must be prepared for serious volatility. Never invest money in speculative plays that you can't afford to lose.
That's a smart framing. All right, let's talk about everyone's favorite roller coaster, Bitcoin. It's been showing some real signs of recovery after a brutal couple of years. Prices are climbing back up, institutional interest is rising, and ETFs are now approved. Alex, is now the right time to enter?
So Bitcoin's story has actually matured significantly. When the SEC approved Bitcoin spot ETFs, that was a watershed moment. It opened the doors for pension funds, institutional investors, and retirement accounts to hold Bitcoin without actually having to custody the asset themselves. That's a massive legitimacy signal.
Right, yeah.
On top of that, Bitcoin recently went through its halving, which is when the reward for mining new Bitcoin gets cut in half. Historically, halvings have preceded massive bull runs. We saw it in 2016, again in 2020. The supply gets tighter while demand keeps growing.
Supply and demand. Classic economics.
Exactly. Now, is it risk-free? Absolutely not. Bitcoin can drop 30 or 40% in a matter of weeks. So my advice, same as always, don't bet the farm. A small allocation, somewhere between 3 and 10% of your investment portfolio, gives you meaningful upside exposure without catastrophic downside risk if things go south.
Measured and disciplined. I like it. Okay, now let's talk about something that people are genuinely buzzing about. SpaceX. Elon Musk's rocket company has been rumored to be moving toward an IPO. And honestly, this feels like one of those once-in-a-generation investment opportunities. How should regular investors be thinking about this?
SpaceX is genuinely one of the most exciting companies on the planet right now. They've achieved things that were considered science fiction just 10 years ago. Reusable rockets, launching humans to the International Space Station, and building Starlink, which is a global satellite internet network with millions of subscribers.
And Starlink is already profitable, right?
Starlink is generating real revenue, yes. And that's actually the key thing that separates SpaceX from a lot of other moonshot companies. They have a real growing business underneath all the ambition. Now, there's no confirmed IPO date yet. Musk has said he wants to wait until Starlink's revenue is predictable enough to satisfy public market investors.
So what can people do right now before the IPO?
A few options. First, you can get indirect exposure through companies in the aerospace supply chain, companies that make components for SpaceX and other rocket manufacturers. Second, there are space-focused ETFs, like the ARC Space Exploration ETF, that give you diversified exposure to the entire sector. Third, when the IPO does drop, don't rush in on day one. IPOs are notoriously volatile in the first few weeks. Wait for the dust to settle, then evaluate.
That patience advice is so underrated. Okay, we are coming up on the part of the show I know our listeners have been waiting for, the practical financial literacy tips. Because knowing all of these trends is one thing, but how do you actually position your portfolio to navigate an AI-driven world? Alex, take us home.
All right, here are my 6 core principles for building a portfolio that's ready for the AI era. Number 1, own the infrastructure. Nvidia, TSMC, and other semiconductor companies are the picks and shovels of the AI gold rush. Every AI application needs their hardware. Number 2, diversify across AI layers. Don't just buy chip makers. Look at AI software companies, cloud providers like Microsoft Azure and Amazon Web Services, and AI native startups through ETFs.
Right. Spread your bets across the whole ecosystem.
Exactly. Number 3, keep a speculative bucket. This is where you put your quantum computing plays, your Bitcoin, your SpaceX when it IPOs. Keep this to no more than 10 to 15% of your total portfolio. High risk, high reward, but ring-fenced. Number 4, don't neglect boring but resilient sectors. Healthcare, utilities, and consumer staples still matter. AI won't replace the need for food, energy, or medicine anytime soon. These provide stability when the tech sector gets choppy.
Balance is everything.
Number 5, invest in yourself as aggressively as you invest in the market. Take that AI course, get that certification. The best hedge against being displaced by AI is being the person who knows how to direct it. Number 6, think in decades, not days. The investors who will win in this AI revolution are not the ones refreshing their brokerage apps every morning. They're the ones who pick strong positions, stay disciplined, and let compound growth do the heavy lifting.
That is genuinely some of the clearest, most actionable financial advice I've heard. And I think the overarching message here is don't be paralyzed by all of this change. The map is being redrawn, yes, but that means there are new territories to explore and new opportunities to claim.
Well said. And to quickly recap everything we covered today, Nvidia's trillion-dollar AI chip trajectory is real and still has runway, so consider a measured dollar-cost averaged position. Meta's layoffs are a warning signal to future-proof your skills and become an investor in the AI transition. Quantum computing is exciting but speculative. Keep exposure small. Bitcoin's structural tailwinds are stronger than ever, but never over-allocate. SpaceX is the IPO to watch. Use space ETFs in the meantime. And above all, build a portfolio with balance, discipline, and a long time horizon.
Perfectly wrapped up. All right, everyone, if this episode gave you even one idea that could change your financial future, do us a favor. Hit that subscribe button right now so you never miss an episode. Share this with a friend, family member, a colleague, anyone who needs to understand what's happening in this new AI-driven economy. Leave us a review if you're listening on Apple Podcasts or Spotify. It genuinely helps more people find the show.
The world is changing fast. The best thing you can do is stay informed, stay curious, and stay invested in the markets and in yourself. I'm Alex.
And I'm Jordan. We'll see you on the next episode of the Money Map Podcast. Take care, everyone.